The Federal Reserve did not make a rate cut last week, and for the first time since 1993, there was a dissenting vote. There was actually two of them. We'll explain what that means next. So if you get some value out of this, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team about how rate policy might impact your real estate plans, you can do that with the link in the comments. The Federal Reserve did not cut rates last week at their July meeting, which was expected. That's what a lot of people thought. But for the first time since 1993, there were votes cast against the decision made by the Federal Reserve. There was two governors that voted against the decision not to cut. I have an idea who they are, by the way. It's anonymous. I'll explain that in a second. And that's a big deal because what we're seeing here, and if you look at the press conference afterwards, you look at the comments, there were zero mentions of housing in the press release from Federal Reserve Chairman Powell, and only once did he mention housing in the statement afterwards. Now, there was a lot of questions from a lot of great members of the media to prod further into housing, and Jerome Powell said some of the same stuff that he always has, which is we're shooting for 2%. We don't control the housing market. We don't cut mortgage rates. I'm not going to analyze this press conference here. What I do know is that seeing that there was two votes against the decision not to cut rates, it's showing what we felt all along, that there's some division inside the Federal Reserve. There's obviously pressure from the White House to make a rate cut. You heard President Trump talk about that this week after he visited the Federal Reserve headquarters, which typically doesn't happen. So we look at the time list. There's not going to be another meeting until September. That means there's going to be two inflation reports and two labor reports that get released between now and September. There's going to be the Federal Reserve meeting in August in Jackson Hole. And last year, what Jerome Powell did, he signaled during his comments that there was going to be a shift in policy where the Fed did cut rates after the summer and in the fall and early winter meetings in September through December. So that could be what happens here. And if you look at what President Trump said during his visit, he said, it's not time to replace Jerome Powell, despite all these rumors. He can't fire him. We know that. And there's these two governors. They both spoke out, right? That we covered this on the show here. There was two governors. Governor Waller, in particular, spoke out after the meeting saying we should have cut rates, which usually doesn't happen. So it looks like we're likely to get a rate cut in September. Even if there is a rate cut in September, I'm a big believer that mortgage rates have already priced in these two rate cuts that were promised at the beginning of the year by the Federal Reserve into pricing. So my takeaway here is that the market's not changing. Rates aren't going to be rescued by Jerome Powell here, and the market we're in is going to be the market that we see throughout the rest of the year. Next year, we'll see what happens. There's a lot of things that can happen even between now and the September meeting. So the lack of a cut, the dissension in the Fed, what does it all mean for housing? And here's what I know. We're going to see rates continue to be persistently in their numbers around 6.75 up to 7%. That's my opinion based on everything we're seeing. We've seen rates bounce around a little bit. And the good news is there's some great products out there. If you go with a jumbo, if you go with an FHA loan, if you go with some PFHA products, and we're going to talk about those in an upcoming show here, probably next week with some lending partners. So the fact that there's other options out there, you can buy down rates, you can do a lot of things. We can't control where rates are going to come in. We can control how you use your capital to get the right monthly payment for you. So if you're waiting for rates to come down, you're likely waiting until 2026. What I also know is that if you look at some of the Economist predictions out there, Zillow, Realtor.com, Fannie Mae, well, a lot of them have revised their estimates that we're going to see less transactions this year than we did last year, and that was the lowest level since 1995. So we're going to be in this market. Now, the good news is if you want to transact, inventory is growing. There's more options out there than there have been. Competition stayed about the same, and we have stability when it comes to mortgage rates. They're lower than where they were, and there's options out there. So with the Federal Reserve holding firm, which is what everyone expected, it looks like there's going to be a cut in September, maybe another in December. They did promise to. They finished the job with these things. I would imagine by the end of the year, best case, we'll see rates maybe get to the mid sixes. That's what a lot of people are predicting. I'm not so optimistic there because the market usually moves ahead of what the Fed does. The market prices this stuff in. So if you're waiting for rates to come down as a buyer or as a seller with a home to buy, remember, when rates come down, there's probably other people waiting too, and that could increase competition. So if you're really thinking about moving, the question to ask yourself, is it the right time for me? Is it the right time to make sense for me? Is there something going on in my life that dictates a move? And if that's the case, that's all the more reason to talk to an agent who can give you a local analysis and help you, whether it comes to selling, buying, or both. The Federal Reserve, they're going to do what they're going to do. You've got to do what's best for you as a consumer and as a member of your household.